What's up, guys? What's going on, weirdos? Oh, how the heck are you guys? How the heck are you? I'm really proud, guys, that I'm not seeing a lot of panicking out there. Not in our community, anyway, right? We're too smart for that now, guys. We're too smart for that now, right? My fam ain't scared of nothing, right? So, very, very proud of the community, guys. Everybody seems to be excited about DCAing for the most part. I don't have a million DMs of, well, I have a million DMs, but I don't have a million DMs of people panicking. That's a good thing, right? So, not bad, guys. Not bad, okay? Let's get into it here. I don't know how long the stream will be, but it's been a very, very long day. So let's get into the super chats. Big Kev dropping that dry powder on me there. Let's go. Even in a red market, my new favorite memes, LFG up 5% and Pico up 27%. Let's go to the moon, baby. Thank you for all you do, all the doors you've opened for me and everyone in the Patreon. Kev, I love you, brother. Absolutely, man. I'm happy to be to have you as part of this family, my friend. Ramona, hit the like and subscribe. Happy Friday, weirdos. It is open mic Friday night over on the Patreon, hosted by our one and only crypto mom, Ramona. Make sure you guys are over there for that. You're not going to want to miss it. All right, let's get into the chat a little bit, see how everybody's doing. You know me, first to hit the likes. That's what I like to hear, my guy. H. Barbarina in the house. You know me says, thanks for all you do for the community, Rob. You're the best crypto teacher. Appreciate you, sir. Hey, thank you so much, man. I try my best, right? Jake the Snake says 103K. Let's go. 85 crash. Oh my God. What's up, Rob? I didn't know BTC was at 109. Yeah, it is a phenomenal DCA opportunity. Got to take advantage of this dip. Absolutely. J Money, first Pokemon of the day. How you doing, brother? What's up, fam? Guys, make sure you're hitting the like and subscribe on the way in. We got 100 people watching. We have 30 likes. We need to get to 100 likes, guys. 70 more to go. We got a mountain to climb. Smash that like button. Lizzie, what's going on? Hey, everybody. Just want to say I love you all, sisters and brothers of Christ. Absolutely. And I love Rob. And I'm happy with all the support we have for everybody. Absolutely. We have shown true support through all of this, guys. And, I can't thank you enough for that. Bless your family and thank you for everything. Thank you so much. Life 1069. I appreciate it. Lizzie says, if there's anybody out there that wants a great community with awesome support and people that actually really care about you and can help you with crypto and just be friends to the page, join the Patreon. Absolutely, Lizzie. Absolutely. We have one hell of a close, tight-knit family over there, considering we have so many people. It's wonderful. Danny, good to see you, buddy. How you doing, man? It's a me, Yamadio. DCA forever. Good evening, Rob. Absolutely. What else are you going to do? What else are you going to do? DCA into a savings account? Really? A savings account? Right? Not financial advice, just putting that out there. Kev, what's up, man? Thanks, big guy. You've opened my crypto eyes. Loving the Patreon community. Hey, thank you for being a part of the Patreon community, my friend. Ramona says, LFG on a little run tonight. Hell yeah, it is. Again, make sure we hit that like before Rob hops on. Yes, got to hit that like. Up to 116 people watching, 44 likes. We're getting there, guys. We're getting there. Got to get to 100. There she is, Gamma Goddess. My cop on the beat in the chat. Absolutely. She says, let's get this money. Happy Friday, fam. Marcus, for my Swift coin, I have two different sell orders. One at 5 cents 8 and the other at 7 cents 8. I like it. Very conservative. Very conservative. You're going to have time to be able to DCA into other projects, in my opinion. EZ, what's going on, man? Dave, what's up, brother, man? John says, Pico, Moonwell, XCN, Zbeck, W, Nadix, and Miria. Hell yeah. Madman's in the house. Paul, good to see you, buddy. William, what's up, my dude? Carlos says, Rob, how are you, sir? I have an extra dry powder. I'm debating between XCN, Jasmine, Swift, or Honey. Can I get your thoughts? Here's my thoughts. You can't really go wrong. However, I'm going to have to steer my ship towards either Swift or Jasmy right now at the currently looking at everything. DH, yo, what's up, man? Hangin says millionaires are made in the red. If we've made it this far, we're used to it. Absolutely, man. Can't be shaken, can't be stirred. AF says, happy Friday evening, Brother Rob. Love you, bro. We need to stay calm. Hell yeah, we do. Hell yeah, we do. It's Friday night, guys. Join the open mic night over on the Patreon. Kick your feet up, have a cold one, relax, and listen to the soothed voices of Gamma Goddess, Ramona, and so many others. Beebs, my dude, what's going on, buddy? Jared, guess what? Got the dip, my guy. Hope everyone's having an awesome Friday. There you go. Chris, dropping that powder on me, hanging in there. We fam, we got this. Thank you, Rob, for being there. Hey, I'm always there. Absolutely, brother. Thanks, man. Thanks, buddy. I appreciate it. Oliver, what's going on, man? Good to see you. Beebs, Rob, I must admit, I have been spending some money lately. Can't shake me out, brother. There you go, man. True strength, man. True strength. Jared said, it's been doing pretty well and filling my dry powder bag on the one of Rob's latest swings. You're missing out if you're not there. Yeah, I got 2 more trade videos I'm going to be uploading to the trading group this evening, guys. So you're not going to want to miss out on those either. High Moments just bought a mil Zebek last week. There you go. Nice. Stuffing those Zebek bags. That's what you got to do, man. That's how it's got to be. That's how it's got to be, man. All right. Let's get into the news a little bit. We're all caught up in the chat. Okay, so, but I just wanted to show you guys something real quick before I get into the news. All right, what do we got? Honestly, September's are usually crappy. Yeah, they are. They are, to be fair. You're absolutely right. All right, guys, check it out. Our trading competition has begun over on the Patreon. A trading competition has started. You can win yourself anything from Beast Pro Fit Pros, PlayStation 5s, MacBook Airs, Apple Vision Pros, Rolexes, Tesla 3 models, and Lamborghini Urus, guys. Join our competition today. The link is down in the description. Use our code. We have partnered with BTCC to do our trading group as well. So check them out, guys. Join our trading group today. You're not going to want to miss it. All right. Let's get into some of the news. Just trying to pull it up. Okay. Here we go. So urgent Bitcoin price prediction. Traders warn of a drop below 105K before 125K surge, or as if apparently 105, right? The cryptocurrency world is buzzing with a surprising Bitcoin price prediction that has many traders on edge. Instead of straight shot upwards, a significant number of market participants are now betting on a substantial dip before a major rally. This shift in sentiment highlights the unpredictable nature of digital assets and complex factors, including market movements. Recent data from decentralized predictions market Myriad Markets reveals a fascinating trend. Traders are increasingly convinced that Bitcoin will drop below $105,000 before it manages to break through 125K barrier. Decrypt reported this intriguing development, underscoring the growing bearish sentiment in the short term. Such a rapid change in market sentiment suggests that underlying forces are at play, pushing traders to reconsider their immediate outlook on the Bitcoin price prediction. It might seem counterintuitive for traders to anticipate a fall when many hope for new all-time highs. However, this particular Bitcoin price prediction is often influenced by several factors, including profit-taking, macroeconomic headlines, and technical resistance. The market often experiences corrections which are healthy for long-term growth. Traders might view a drop below 105K as a necessary retest or a chance to accumulate before Bitcoin at a lower, accumulate more Bitcoins or at a lower price before the major upward movement towards 105 again, 105. I don't know why I keep saying that. Fun and games, Brookside Street. Okay, there you go. Understanding these market dynamics is crucial, but making informed decisions requires careful consideration. Here are some actionable insights for navigating the period of uncertainty. Do your own research, risk management, long-term perspectives, which a lot of people don't really have, and diversification. So with so many traders starting to predict a move to the downside, it makes me want to think that we're not gonna go to the downside, right? Is it possible? Of course. I'm in the boat though that I don't think we go much further. We could on a wick. Listen, let's go down. Let's go look at Bitcoin for a second. We could wick down for sure, but like we could wick into this pocket here. Maybe I think max pain on the options expiring is 107K, right? I don't really see us dropping any lower than that, to be honest with you. We could, but right now, I don't know. I think we got a bit of a double bottom that's going to play out here. We could wick down here. 107,252 is where we bottomed over here. So I could see that, but I don't think we're going below 105. Not right now. I'm not convinced of that yet. Frank, welcome to the family, brother. Welcome to the family. Good to have you, my guy. Good to have you. Okay, let's continue on here. What do we got? Let's go over to Squawk Box and see what's happening over there. Strong earnings growth will continue to drive markets higher, says JP Morgan's Stephen Parker.
Joining us now with more on the market, Stephen Parker, JP Morgan Private Bank, co-head of global investment strategy. I guess I'll start with in a similar vein to, with Katie Stockton. She's obviously looks at technicals. You're more fundamentals. There's probably no one that doesn't or hasn't heard that the market is fully valued. I think even Jay Powell intimated as much the other day. Also said that doesn't necessarily mean that the market's ready to go down either, because overvalued markets a lot of times get more overvalued. What's your view? What's more likely here?
Well, I think the first thing to keep in mind is that relative to long-term history, the market that you're buying today is higher quality, stronger growth, less cyclical. So I think a higher valuation than history would indicate makes sense. But I think more importantly, when you think about what's going to drive markets over the next 6 to 12 months, it's going to be earnings. You know, we're not expecting multiples to continue to expand. In fact, they may come in a little bit. The good news is we're teeing up another year of strong growth this year and next year, looking for our third double-digit earnings growth year in a row for the S&P. We think that's what's going to continue to drive markets higher.
Okay, so we can keep the same multiple, let's say, which is probably an optimistic outlook, but you're hoping that earnings rise. So I guess the risk to that is that tariffs continue or go higher and hurt profit margins so that we don't get higher. Or do certain things that are happening with the big beautiful bill, does that make up for that? And corporations will be doing better because of things in that bill?
So far, you know, companies have been
deregulation.
Companies thus far have been able to absorb, you know, a lot of the impact of tariffs. Margins have been incredibly strong. And while we think we're headed for a slowdown into the back half of this year, as you said, there's some nice tailwinds that are coming into the market for 2026. So you have easier financial conditions, which is the Fed and rates and equity markets more broadly. You have, you know, the stimulus from the one big beautiful bill. And importantly, this is kind of central to our bullish case, you know, this AI spend, this capital the capital expenditure boom that we're seeing is having a huge impact, not just on company profitability, but on economic growth more broadly.
Right. And some companies are benefiting from the spending by other companies, which we've been talking about all week. Okay, I guess the other concern might be the consumer. We're getting some rate cuts. Maybe we're in an easing cycle. Maybe we only get one, or maybe we get more. But we've talked again and again about, the high-end consumer's great.
Yeah.
Stress at the low end. That doesn't make you worry about corporate earnings?
No, I think the consumer, given how much of it is driven by the high-end consumer, will remain resilient. We've actually seen expectations for earnings growth in the consumer sector come down a lot more than the broader market because of these concerns. What we're watching most closely, though, is labor markets, because even if the high-end consumer is driving a lot of the spending, consumer sentiment is really going to be focused on how comfortable people feel about the stability of their job. And we're going through a bit of a labor market slowdown right now. The good news is, as you look at surveys around business optimism, those are starting to improve. As you look at earnings reports, and we follow the number of companies that are talking about job cuts, that number has been coming down. So both of those things indicate that we're probably troughing from a concern perspective as it relates to labor markets. And if that stabilizes, I think the consumer can remain strong in 26.
A couple of people said that, I think, earlier this week, that we've passed the low point in labor,
Yeah.
in weakness in the labor market, and we're going to start re-accelerating, which I think Mike Wilson made that point. Do you agree with that?
Yeah, I think so. I mean, look, we're going to be in for some bumpy headlines over the next couple of months as the delayed impacts of tariffs and uncertainty work their way through the system. But when it comes to investing, when it comes to equity markets, we're telling clients, get ready. Any sort of volatility, any sort of pullback that we see on these headlines is an opportunity, in our opinion, to buy.
See, that's the thing a lot of people aren't really catching on to, guys, is that the markets have to digest everything, right? Whether it's CPI, PPI, jobs, labor markets, inflation numbers, right? It's all got to be digested. Tariffs, right? There's still a lot of fear that the tariffs are still going to affect inflation, and then we're going to see some sort of major spike up in inflation because of the tariffs, and it's all just kind of delayed, right? Some people think that's not going to happen. Some people are holding on to we might see it, and those people holding on to the fact that we might see it is what's causing a little bit of uncertainty in the markets, right? So got to give time for the markets to kind of digest everything. I'm hoping that the labor markets have not bottomed out yet. We don't want to see a positive labor market update this month, because it's less of a chance that Powell's going to cut rates if jobs numbers come in better or that they're showing improvement, right? We don't want to see that quite yet. Not quite yet, right? Maybe another month or two of bad jobs numbers, then we can start to kind of curve back to the upside. We need one or two more rate cuts first. That's just my thoughts on it. Ethereum spot ETFs receive S1 amendment filings from major firms. Nate Garcia announced the submission of an S1 amendment for spot Ethereum ETFs by Franklin Fidelity and others for September 27th, which is tomorrow, signaling a potential market shift. These amendments, expected to be approved soon, indicate regulatory progress and could catalyze significant institutional interest in Ethereum, potentially affecting broader crypto market dynamics. A series of S1 amendments from notable financial firms like Franklin Templeton, Fidelity, have been submitted for spot Ethereum ETFs. He identified this on his social media platform, marking a potential turning point in cryptocurrency asset management frameworks. These amendments, viewed as positive for institutional players, specify collateralization, an often favorable condition for regulatory approval. Anticipation grows as approval is expected within 2 weeks. Such a timeline suggests regulatory processes may be well underway, reinforcing market interest in Ethereum and signaling potential shifts in its valuation. Should these ETFs gain approval, Ethereum may witness increased demand driven by institutional participants eager to capitalize on the potential of digital assets. So, new amendments to spot Ethereum ETFs, guys. This could get juicy. Strap in, strap on, and get ready for liftoff. Segueing on Ethereum, price prediction next up, $20,000. Possible, says an analyst. In recent Ethereum news, exchange balances fell to their lowest point in 9 years, now sitting at just 14.8 million Ethereum. The decline comes as the digital asset treasury firms and exchange-traded funds continue to step up their accumulation, steadily pulling coins away from trading platforms. At the same time, market sentiment is heating up. One crypto expert is now pointing to the possibility of a dynamic move higher. He projected that Ethereum could surge from its press time level of $3,955 to as much as $20,000, a potential 5-fold rally, not financial advice. According to crypto analyst Cantonese Cat, Ethereum is once again approaching a pivotal stage in its long-term market cycle. The analyst shared their Ethereum price prediction on X, highlighting how each major rally in Ethereum has historically been followed by a deep correction that settled into what he called a cycle liquidity zone. These zones have consistently acted as accumulation ranges before Ethereum launched into its next explosive advance. This time, the structure looks no different. Ethereum is pressing against the upper boundary of the current liquidity zone, supported by a steady rising trend line that has been intact for years. The influence of the ascending support and confluence, of the ascending support and horizontal resistance is a classic setup that often precedes a breakout. If Ethereum manages to push beyond this zone, the move could signal the beginning of its next expansion phase based on historical patterns, such as breakout carries the potential to propel prices past prior highs. Say that 3 times fast. With long-term targets extending deep into 5 figures. What makes this outlook even more compelling is the alignment between technicals and fundamentals. In even more Ethereum news, exchange balances are at 9-year lows, while institutions' demand through funds and treasuries continues to grow. We've got Tom Lee and other funds adding Ethereum to their balance sheets and their treasury. Ethereum continues to climb up in the ETF inflows as well. Big things popping, little things stopping, guys. All right, let's segue back over to Squawk Box. Expect the Fed to continue to gradually cut rates, says JP Morgan's Priya Masira?
Key inflation data due out later today. Join us now to talk about rates in the Treasury market and the James Comey indictment. Priya Misra. No, not that, right? No, maybe not.
Not the James Comey, no.
Okay.
Not a lawyer.
JP Morgan, yeah, none of us are. JP, we have, you know what? Thank God for this. We have way too many anyway. JP Morgan Asset Management Fixed Income Portfolio Manager. Cross currents. That's what I gathered from a lot of your comments about what is happening. Is it unprecedented? This type of environment? There are certain things here that we haven't seen in decades. I think to try to figure out how do you do it. And what's your conclusion?
So there are structural aspects and cyclical aspects. We're dealing with both right now. This is not the only time in history. So, but it is a very challenging environment. So what are the structural components? Companies are solid. They came into this year with very good balance sheets, with the ability to innovate. Once we know where that tariff world is, what are companies doing? They're trying to absorb as much as they can. They're trying to pass on what they can. But then we've looked at the cyclical headwinds. Interest rates, I would argue, are still restrictive, which is why I think the Fed, is right to start to cut rates. I think what the end point is, there's a lot of debate. What is neutral rate? I think the data is going to tell the Fed. I don't think, there's a lot of division in terms of the neutral rate. There's division in terms of how much inflation, how transitory will inflation be. I don't think they're going to use that word, but they are debating how, is this a one-time tariff shock? So you asked about the conclusion. The conclusion here is, have a diversified portfolio. Think about fixed income Fixed income is giving you income and it's giving you diversification. If the economy slows down, if those cyclical aspects I talked about, higher interest rates, this low fire, low hire, labor market turns into a starting to fire labor market, the Fed's going to be aggressive. They're going to cut rates. So you get that diversification. If you have the AI trade on, have something that'll hedge, something that if things slow down, what will work? Fixed income will work. So that's why we're seeing flows into fixed income. I think there was concern a few months ago, sell America. No, there was some hedge America. There's no sell America. The US is still outperforming on a growth standpoint. So, I think, which is why I think bond funds make sense. I don't want to talk my book, but I think if you own the structural AI, structural strong corporate balance sheets, own some credit, own some duration. So we like 5-year, 10-year, corporate, high-grade corporate paper. Little nervous about triple C high yield, but I think if you're in double B high yield, single B, there's some great companies to own, and you're getting that yield now, given where interest rates are.
What do you think's happening with the labor market? Is it, if we hit bottom and we're re-accelerating, is it possible some of the what you talked about with companies reacting to tariffs? Is it possible that some of it, they react by not hiring as many people?
I think absolutely. I think there's uncertainty around tariffs. I keep being told, well, we know what that tariff rate is. You just see last night, we don't actually know. I mean, depending on which sector you're in, we still have the 301 investigations. So what have companies done when, with all this uncertainty, immigration, they pause. So I think we're in that pause mode. Now, I can see the upside risk. You talk about re-accelerating. I don't think we're re-accelerating right now.
With labor, you don't think we've hit, you think the worst data is yet to come?
I think it's possible that growth slows down, that you could actually move from low firing to pick up in firing. You could also see the pickup in hiring. We do have the one big beautiful bill kick in next year, bonus depreciation. Do companies say, okay, we finally know what to do with tariffs? And then let's start to hire. So I think risks are balanced to the labor market. I don't think we know. And that's why the Fed cut. They're worried about the downside risk to the labor market. I think the side, both the risks are balanced right now.
Priya, we spent a lot of time yesterday talking about the potential government shutdown and the threat from the administration at this point that they would fire a lot of government workers instead of furloughing them and bringing them back. Do you pay a lot of attention to that, or you think it's still noise at this point?
I find all the shutdown, debt ceiling, typically political theater, but
Yeah.
it's typically furlough,
Yeah.
where I would say that it's a short-term impact. You don't get paid for 2 weeks, then there's back pay. Is this a negotiating tactic? In which case we can ignore it. If there's actual layoffs, we saw the impact of the Doge.
Of Doge, right.
Exactly. So this would be Doge on steroids. So if
What
does happen,
what does that mean for the broader implications in the labor market if you have corporations that aren't hiring at this point too?
Exactly. So the private sector is pulling back. If the government does that, I think this is one of the reasons why the labor market outlook is going to be murky. Here's the other thing. If we go into shutdown, we're not going to get the payroll report. Now, people say, well, you can't rely on the data.
Right.
When I look at revisions, if you look at the 3-month revisions, you're getting a lot of data. So if we don't have that, we're going to look at all other data.
That's really interesting. We won't get other data as well.
Right.
Well, you go through that.
CPI.
So we're looking at a time where we say the data is not great, but we're already in a fog, as the Fed has said, as Jay Powell has said, trying to figure things out.
Right. So we're going to look at more data, I think, just maybe third tier, second tier surveys. And that's where companies are not signaling that they're ready to fire. So that's why I can see where the downside risk might be lower. They're not saying they're going to hire a lot either. NFIB hiring intentions declined and it's sort of bottoming out. So hopefully it starts to pick up, but we haven't seen that sign. So, but we'll be looking at all of that. But I do think the Fed, where Fed funds rates are, they're going to still cut in October. I think they've told us that they're going to gradually get to neutral. Now, is neutral 3.5 or 2.5? Governor Myron thinks it's 2.5. A lot of people at the Fed think it's 3.5. I think that's a debate we're going to have next year. But for now, we're at 4.25. So I think they're going to continue to gradually cut rates.
I hope she's right.
3.25, 3 3/4 to 4.25 is where you see, after all this, is the range for the 10-year at this point. And and I asked you for the conclusion, and you said it. The conclusion is to extend some duration. If you could bank on 3.75 to 4.25, you should be buying something a little bit longer. And you could even go down the doesn't have to be AAA either.
Exactly. Right. You can get 5.5 if you go into invest. If you just stay within investment grade credit, you're getting 5.5 yield.
What if you go to BBB plus? What do you get?
You're getting 6.5.
Which is what long term in an average stock market, that's about what you can expect. So.
I hope she's right. I hope she's right. All right, so as we continue to monitor Bitcoin, right? Sitting right now, 109,400. Told you guys for the last couple days, we're probably going to consolidate. Right here, down here, we consolidated for what? 1, 2, 3, 4, 5th day before we finally broke back to the upside. So, hey, who knows? Maybe we consolidate here for 5, 6, 7 days before we break back up, right? That's probably what's going to happen. Scott, thank you, brother. Thank you. Braveheart says, 105K, man. We shall see. I'm just tuning in without hearing the crypto crystal ball, crypto future analysis. Don't sleep on Rob's crystal ball, baby. Let's go. Absolutely. All right, guys, so that's the news this evening. Get over there, guys. I want you to make sure you enjoy the open mic Friday night over on the Patreon, hosted by our very own crypto mom, Ramona. And obviously, enjoy the Gamma Ritas from Gamma Goddess and so much more, guys. So get over there, join our trading group. I will also be dropping 2 videos tonight for our trading group. 2 more trading opportunities. Make sure you check that out. The link is down below. It's in the chat. It's in the pinned comments. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.